Welcome to the Modern Real Estate Investor Podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, and capital raisers in the world to provide you with the tool sets, the mindsets, and the skill sets to help you conquer yourself, your life, your marriage, and use real estate as your wealth creation vehicle so that you can live a more successful, happy, and fulfilled life of growth and contribution. If what you're after is having it all, if what you desire is becoming the best version you can be across all areas, mentally, physically, emotionally, spiritually, sentimentally, and financially, you've come to the right place. We will bring to you the best of the best real estate entrepreneurs who will give you the insights, knowledge, experience, and skills so that you can go out and crush it financially and across all areas of your life. Grab pencil and paper, sit back, enjoy, and you are welcome to the Modern Real Estate Investor Podcast. Hello, Modern Kings and Queens. Welcome to another episode of the Modern Real Estate Investor Podcast, where we interview some of the most successful real estate investors from around the world to provide you with the tool sets, minds, and skill sets for you to conquer yourself, your life, your marriage, and use real estate as your wealth creation vehicle so that you can achieve financial freedom and live a more successful, happy, and fulfilled life of growth and contribution. So I'm excited today to get to talk to Jason Balara. He's a real estate investor. He's a husband, father, entrepreneur. He was actually a vet surgeon before he turned a real estate entrepreneur. He has his own podcast that he uses to that he uses to help people live a better life and achieve financial freedom. And super excited to get into everything that you are doing right now, Jason. Thank you very much for being here, man. I appreciate you, and you're welcome to the show.
Yeah, thanks for having me, Alex. And just full disclosure, I am still a veterinary surgeon. I have just added real estate investing to it, so I haven't left that behind.
Nice. Okay, cool. Veterinary surgeon. So actually, what I start my episodes with is I ask my guests to walk us through their real estate investing journey. I bet you mentioned veterinary in there in 75 seconds or less, Jason.
Yeah, sure. They actually kind of went hand in hand. I've been working in construction since I was a teenager. I was also that kid that wanted to be a vet. You know, as a 5-year-old, when people asked me what I wanted to be a vet. I think that's common for a lot of kids. It just never left me. And so just coming from a background of not having a whole lot of money, grew up, raised by a single mom, I sort of learned the value of ownership in real estate by not having it, and realized that that's what I wanted in my life. And so sort of seeing that as part of my future, it was always in my sort of goal set to buy real estate. And so I started buying single family things that I could fix up when I was in my early 20s, and that kept kind of snowballing, buying sort of fixer uppers and things like that. And then it wasn't until about the last 3 years that I started getting into commercial real estate and syndicating multifamily deals. But that construction background, I asset manage and construction manage within my deals. So all that I learned in the years going up to it really kind of contributed to what I'm doing now within the commercial real estate space. And I did all of that, sort of single family residential stuff while going through vet school, while becoming a veterinary surgeon. So they really did go pretty much in tandem.
Okay, because I mean, going to vet school, I imagine, is not an easy thing to do, right?
Sure, it is not. No.
So you were doing all that, like single family and buying homes while doing that. So could you give me a little bit more detail?
Sure.
Of that journey, Jason?
Yeah, and there's definitely, sort of seasons of it, right? So before I started vet school, I worked in construction. I worked on my own house, did sort of that live-in flip model, did some of the BRRRR before it was called BRRRR. And I just kind of kept doing that along the way. And I needed to pay my bills somehow. So I was working in construction and working for contractors while I was going to vet school. When you're, the first 3 years of vet school, it's classwork. It's kind of just like college, just very specific. And so you still have weekends, summers, that kind of thing. So I was working on my house, other people's houses. And then when I the fourth year of vet school and then my surgical training afterwards, that's pretty intense in terms of, sort of being in the clinics. And so at that point, I wasn't doing a whole lot outside of my own house. But then, sort of fast forward beyond that, I had, sort of like a job like everybody else as a surgeon. And I would, in my spare time, be doing real estate again on the residential side. And it was in 2020 that essentially we finished renovating our own house. And I had always had that sort of urge to be a more serious real estate investor. And that's when I started digging in and found out about syndication and did mentorships and things like that to help accelerate that growth, and ultimately really with the goal to get to the point of financial freedom and work optional. But I really like surgery. I love being a surgeon. I also really like real estate. So I don't necessarily want to give up either. I'm still figuring out that balance.
Mm-hmm. All right. So, you actually went into mentorship to speed up the process of becoming a quote unquote more serious real estate investor. But let's see, that was in 2020, so 3 years
Correct.
ago.
Yep.
Okay, awesome. And what made you? So like, what is it that made you want to go to commercial? Is it just like I wanna just get deeper into real estate, or did you, or did someone tell you about it?
A lot of it had to do with listening to podcasts and kind of learning. I didn't know really that getting into commercial was an option, but I really liked the idea of the scalability of it. My initial, I guess part of what I will say is when I started to look at, sort of real estate investing and being more serious about it than just kind of my own house or a friend's house or whatever, I saw the opportunity, but I also live in Los Angeles. And so it's very hard to kind of cash flow a rental here in Los Angeles. It's not impossible. It can be done, but it is quite hard. And so what I started looking at was long distance real estate investing, and the scalability of that on the residential side is, I think, much harder than doing it on a commercial side where you'll have, you know, third-party property management and things like that. So it is, you need a lot of single-family houses, residential assets, to make the property management costs, sort of cost effective.
Uh-huh. Okay. Yeah, it makes sense. Um, so when you decided to go into that you needed some mentorship, what brought you to that decision that you needed some mentorship? Because that's like a huge key, right? Like that's like a huge shortcut when it comes to in entrepreneurship in general, right? Just
Yeah.
like learning from the mistakes and from the proven roadmap of someone else who is already maybe 5-10 years ahead of you. Um, but what made you decide, you know what, I'm gonna take some time mentorship?
Yeah.
How did that look like?
It's a great question. I think you ultimately, if you want to get into real estate, you probably have, I would say, probably three pathways. One is being passive. And so if you want to be passive, you don't necessarily need a mentor to be passive, but you need to find some people that you trust in the space to go ahead and invest with. The other two ways are on the active side. One of them is, you know, the person who has maybe a lot of time, but doesn't really have the money to put into investing in a mentorship. The other side of that is someone who doesn't have a lot of time, but maybe has some capital to put into that, investing into a mentorship to kind of speed up that learning curve in the beginning. And, if I was in the position I was at 25, or when I started this, I would have been the person with no money that was just gonna, sort of sweat equity my way and figure it out. But I'd been a surgeon for a number of years. I've been able to set aside some money. And so it made sense to me to kind of use a mentorship to accelerate that learning curve.
Awesome. Yeah, and it's like the ultimate hack, especially in real estate, right? So you started large capital. How long ago did you start large capital? I don't know why I'm having trouble speaking today. Like, it's crazy.
That was in 2020. Lark Capital started early summer of 2020 was founded.
2020, so 3 years ago. Tell me, can you tell me a little bit about some of the deals that you've been able to accomplish in the past less than 3 years?
Yeah. So we started the company, kind of, as I said, to get into commercial real estate. I'm sure a lot of people know that have gone into that space that finding your first deal isn't always the easiest thing. It can take some time. I actually think that's in a lot of ways why many people like single family or residential real estate, because it's usually a quicker process, right? You can find a deal faster, you can find the next deal faster. It just takes a little bit longer to sort of do deals. So you need more patience, I think, in commercial, especially right now. The deal flow is slower. But it took me about a year to get the first commercial deal under contract. In that time, though, like I said, I was doing my mentorship. I did a few other things. This is the kind of the beauty of real estate to me, is that there's like a million different ways to be involved. I did some hard money lending to some flippers just to put capital to use. I also did a joint venture into a self-storage deal with some people I had met through my networking. And so it was just trying to be involved, put our money to use, kind of make things happen. And then it was in the summer of 2021 that I got my first deal under contract. It was a 76 unit deal in Decatur, Georgia, so Atlanta MSA. And it was, it is a C-class value add, sort of I think it's a typical landing spot for kind of a first time syndicator. And so that deal came around, like I said, got it under contract in the summer of 2021, and then found out that it's true what they say about the law of the first deal, because the second deal came under contract a month later before we had even closed the first. So we closed those first two deals in December of 2021. There were some holdups on the lending side, so that's why it was, we were probably under contract for at least 4 months on those. A lot of times they'll close in 90 days. And then we start into, the beginning of 2022, the first half of 2022, the market's very hot. I know at one point I went to Atlanta. I was there for 2 days. I toured, I think, 12 different properties in 2 days. And it was crazy. Everybody was buying things up. Prices were, or cap rates were compressed. So it was very competitive. Ended up one of the deals I looked at in those 2 days, we went under contract and closed that one in July of 2022. And then, as most people in the real estate space are familiar with, things got a little bit crazy in the interest rate market. The interest rates kind of shot up. I actually had gotten another deal under contract in June of 2022 that ended up falling out of contract due to the interest rates rising, and the price no longer worked at the interest rates as we got closer to when it was time to close. So the last deal I closed was in that July of 2022. Deal flow got really slow over Q3 and 4 of 2022, and so we focused very, very heavily on asset management of the deals we currently have.
Nice. So in less than 3 years, how did your portfolio transformation look like?
Well, I have, I guess I left some of it out, but I have 236 units that I found the deal. I'm the primary sponsor. A lot of people throw unit counts around and stuff. I think that's personally, I think that's a misleading metric. I also have about 300 units that I'm invested in passively. I have 450 units of self-storage.
You could say that you have 500.
Yeah, like I could tell you I have 600 or 700 units in total, but I really, what I primarily manage is those 3 deals in Georgia currently.
That's awesome. So I mean, that's pretty huge success, honestly, right? So what do you think has been some of the keys to have been able to haven't been able to accomplish that in such a short period of time? And tell me a little bit about that first deal, because there's a lot of people listening to this who, you know, haven't done their first deal, right? They might be working. They have been working on this for a couple of months, and they still haven't been seeing any results, any fruit, and of their labor, and maybe they're thinking of giving up. So how was your experience? And talk to me about some of the keys that allow you to accomplish this.
Yeah, and I would say that those two questions, honestly, the answer is kind of the same, and it's an unwillingness to quit. So if I think about that first deal, right? I told you it took me about a year to get it under contract. So I started my mentorship, and I was 5, 6 months into the mentorship, and I was extremely discouraged because I hadn't found a deal yet, and I was like, what am I doing wrong? This just isn't going the way I expect it to. Sort of that's one of the good things about doing a mentorship is you realize that that's just what it takes. It takes that long. It takes a long time to kind of get those deals if you're approaching it in the right way. And so I was really pretty discouraged about it, sort of 5 or 6 months into that. And I really had to kind of have a mindset shift of looking at this really in the long term and just I don't really think about quitting. So it's not really that, it just doesn't pop into my mind. And so it wasn't that I was thinking about quitting. I was just like, I mean, frankly, this sucks. I don't know why I don't know why I can't do it. That kind of just being discouraged. And so I did have to sort of reset myself and say, okay, what really focus on the process, right? Not, a lot of the mentorship programs, a lot of the gurus, it's all about getting a deal under contract. But the reality is if you're going to do this for more than one or two deals, you're building a business. And so you need to really look at it from the long term, like the very long term, 5, 10 years, not, 3 to 6 months, which is, I think, to a lot of people, I think 3 to 6 months is a long time. And so it's having that mindset of I'm building this for the future. And so that's what, that my podcast is called the Know Your Why podcast, because what drives me is my family. And when I got into that really discouraged state, or I mean, it's happened other times in this journey, right? I had a deal fall out of contract. I've been discouraged along the way, but I also look at it like, okay, I'm not building this for me. I'm not building this for 2023. I'm building this for my 2 and 4 year old when they're 20 and 30, like both the knowledge and sort of the asset or wealth management or growth, whatever you want to call it, but just sort of that legacy. So who cares what happens in 6 months, right? If I don't do a deal in 6 months, I don't like it, but it doesn't affect what my actual goal is. And so the trick is to focus on that journey along the way. So I guess maybe I tangented a little bit there, but that's kind of because I think people that are looking at getting into their first deal, especially now, if it's taking you a long time, do not get discouraged. It's taking seasoned investors a long time to find deals. So it's just because you don't want to just take any deal. You want to do it right. So it's kind of if it's taking you a long time right now, that's probably correct.
Mm-hmm. Yeah, awesome. So how can someone adopt that long-term thinking? Because like 6 months is a long time for a lot of people, right? Like
Yeah.
even right now for you probably think like 6 months. Maybe you've been able to shift that a little bit, but 6 months is like, damn, it's a lot of time. And then
Yeah.
imagine for people who, and in the space, in the marketing space, in the guru space, everyone's promising results in the next 90 days, in the next 6 weeks, in the next 30 days, right?
Close your next deal in 30
So
days. It's silly.
yeah. So what process did you go through in your mind or emotionally? Because I really like to talk. I really like to get that. Because like, let me give you a story and let me give you an example. So for example, I learned a really hard lesson about having a niche, right? Niche message offer, about having a niche and focusing on a specific type of people, right? A specific market type of demographic. And I knew that information because I had read a ton of books, I had taken a ton of courses, and I just knew the information intellectually, right? But it wasn't until I actually went out there and failed majestically, right? I threw an event for 100 people, like 15 people showed up, and then every single one of those 15 people were like different types of businesses, like hot dog stand, people who sold clothes,
Yeah.
shoes, real estate, all kinds. And I was there standing, thinking like, who the fuck should I talk to? Like I didn't know, right? And that was when it clicked emotionally, right? Like emotionally, I was able to like embody it and become the type of person who understood that lesson, right? So yeah, it's one thing to know intellectually. Right? You gotta be long term. You gotta have a wider horizon. You gotta like see the big picture. It's like one thing to understand that intellectually, but it's another to be able to internalize that emotionally and really, really understand it, right? And
Yeah.
to the point that you feel it, are
Yeah.
that advice. So could you? And I think it's really important because like being long term could literally make or break your real estate career,
Yeah.
right?
Oh yeah. Yeah.
So
100%. Yeah.
so could you? And then it could be the difference between you giving up and just thinking, you know what, I'm gonna go for another thing, and then just like keeping on that cycle of shiny object syndrome, or just knowing that you know what, I'm going to be doing this for my family in the next 30 years, so I might as well keep on going, right? So could you walk me through the process that you went through, like maybe I don't know the mental framework or the mental process to be able to really understand and make that internal shift
Mhm.
from just understanding that you gotta be a long-term thinker and real estate is about long-term, and to actually being that type of person who actually has that wiring.
Yeah. So I mean, there's a couple. It's a great question, and there's a couple of answers here, Alex. And what I mean, honestly, the real answer is it never goes away, right? You never feel 100% like, okay, I know in the long term everything's gonna be like, you're gonna have feelings along the way of frustration and impatience and all of that. But so how do you fix that? One, like I said, you got to focus on the process. You got to focus on what are the things that you need to do. So if your goal is to close a deal, what are the things that you need to do to close a deal? And depending on whatever your area of real estate would be, whether it's commercial or residential. Like if we look at a commercial deal and you say, I want to close a deal, well, what are the steps? You got to find a deal. You got to do due diligence on the deal. You got to place debt on the deal. You have to raise capital for the deal. Then you have to manage the deal for years, right? So you've got
Yeah.
and that's like breaking it down pretty broadly as far as the steps, right? There's more to it within each of those steps, but if you break it down even to that level, now you're really talking about, okay, you're probably not going to be able to do all of those things yourself. So one thing you need to be doing is networking and finding people that are good at the things you aren't doing. Mentors, whether it's a paid mentorship or just going to like meetups and conferences and finding people that are doing what you want to do, and getting around them. There's also, I mean, social media is great and also terrible, and in sometimes in the same ways. So you look at social media, people tend to show their wins, right? Like you look on social media and you're like, this person's an overnight success, but that's because they're showing you your success. But what you want to look for is the people that are transparent about, kind of what got them there. And I'll tell you, like very much lately I've been watching. So there's people I would say for this perfect example. There's Gary Vee. I think a lot of people know who Gary Vee. He talks a lot about like people who are in their 20s and 30s and even 40s think they're old, and he's like, you haven't even lived a third or a half of your life yet. Stop thinking you have to be in a rush. And so
Mhm.
he's very big on that. And then I also really like Alex and Layla Hormozi from the business side. And Alex just did a really fantastic podcast talking about kind of a lot of the growth phase that they were in. One of the things that he said that I thought was just so great, he said, focus on the middle. That's how you can be successful, right? If you're focused on the end, you're skipping all of that stuff in between, and you're just going to be frustrated that you never get there. So if you're focused on what the middle is and you get good at the middle, the goals will come. They'll happen. The other thing that sort of was a part of that same, I guess, narrative is he said, so he pointed to life, he pointed to marriage, he pointed to business. These are not things that you win, because when you win a game, the game's over. But you don't want business or life or marriage to be over. So you gotta get happy and comfortable with the middle, the work within those certain things. And so it's, yes, there are exits in business and things like that. When we syndicate a deal, we don't necessarily plan to hold it forever. But the reality is you're not trying to syndicate one deal. You're trying to build a company that can syndicate deals over and over again and provide great returns for your investors. And if you're focused on one single deal, that'll never happen.
Yeah, that's great. That's a great mindset to have. Like that thing, the infinite game. I don't know if
Right.
you've ever read the book by Simon Sinek, Infinite Game. That's a great book. I need to read it again, by the way.
Yeah, I have
Because
not, but I've
I
heard
probably
of it. No, it's a great concept.
it is. It's a great book. Like yeah, and I read it, but like thinking about the things that I remember from that book at the age that I was, I should read it again because now I'm like a little bit
Right.
more mature and yeah, I
Yeah.
should read it again. But yeah, that's great advice, and I just thought that I needed to, drill down a little bit more into that because it's super important. So the other thing that I wanted to tell you is, let's see, so you were able to make all of those deals, right? And could you walk me through the process of like the first one, just going back up again? So you found the deal, and then now you found the deal, you needed to analyze it, right? Like you said right now, and then you needed to raise capital for it. And now you need to manage it, right? So you found the deal, and then what happened, Jason?
So it's actually interesting and probably a good point for listeners. I found that deal. So, you got to look at potentially hundreds of deals to find the one that works. And so like I said, I've been looking for a year. I had initially been not nearly focused enough. On one market, I was like, well, I have better odds if I look at every single market, and it's impossible to sort of build a strategy by looking at every single market when you're starting out. So I would advise people to be hyper focused on one, maybe two markets. And
Which is
so,
going back to having a niche, right? Even
right,
with like the type of assets that you buy and the type of investors that you
yep.
raise capital from, like always being focused. So I just, you know what? Let's just deviate. Deviate? Is that a word? Deviate? In
Sure.
Spanish, that's a word.
It's a word in
Deviate
English.
from the from where we were going. And let's come back. Let's come back to that right now. But let's talk about having a niche, Jason, because that's also a super important lesson, I believe. Right?
Yep.
So having a niche, like having a niche in the types of properties that you buy, having a niche in the type of investors that you raise capital from. How like what's been your experience? Like what have you have had to go through in order for you to realize that, oh, I gotta focus. And why do you think most entrepreneurs and more importantly, real estate investors don't focus?
So yeah, like I said, for me, focusing and finding that niche was, I didn't do it at first. And I think that is some of the reason why it was hard to get, why it took a long time to get that first deal is because, shiny object syndrome, stuff like that is very common. You're like, well, look, this person's doing great with, industrial, and this person's doing great with self-storage, and this person's doing great with office or whatever. But you have to pick something. It's not that you have to pick the same thing for forever. It's not that you can't eventually diversify. But when you're first starting out and learning, you're going to have a much better handle on it by choosing one asset class, like I said, one or two markets, and really narrowing down your, you can call it buy box, your deal criteria, whatever you want it to do, or whatever you want to call it. But getting pretty solid on that in knowing, first of all, it's going to give you more credibility when you're talking to brokers, because you can say, I am looking for these specific, and you won't waste your time. Because, right, if you're looking at, right now we want newer than 1985, I want greater than 100 units, and I'm still very focused on the Atlanta MSA. So that means if someone sends me a deal that's like in Ohio and it's 50 units, I don't even open the email. Like and it's just it saves you time, and it keeps you focused. You can look at surface level information and decide, am I going to put any time into analyzing this any further? And the other part of that, so you have better credibility with the brokers by having really knowing your niche. And then same thing with investors, right? Like, especially in the beginning when you're trying to attract investors, if you're like, I do everything, they may not be willing to trust you. Now, once you have a track record, you've gone through some deals, can you start to expand what your offerings are to investors? Sure. If you want to diversify, there's plenty of people to partner with to diversify. You don't have to do every single thing yourself. It's just not, to me, like I've been focused on, I mean, once I really dialed it in, I've been focused on Atlanta since beginning of 2021, and I still am, because until I feel like I could be on vacation for a month and Atlanta would run its, all my deals in Atlanta would run themselves and I don't have to worry about it, I feel that there's no point in going to another market and trying to do the same thing.
Mm-hmm. For sure. So, Jason, I just want to tell you my take on this, and I want to see what you think. But I think that the reason why a lot of most entrepreneurs, when they first started, they don't get a niche, right? When they don't niche on what they offer, they don't niche on who they offer it to, they don't niche on anything, right? It's because of scarcity, man.
Yes. Yep.
Yeah. So, for example, just think about a digital marketing agency for 1 second, right? Like, why would a digital marketing agency try to service all types of businesses, right? Because unconsciously they just think there's not enough, or why would a business fear to go really deep into a specific type of investor or a specific type of asset class? Because they just think there's not enough, right? And scarcity is one of the, I think it's the main thing why entrepreneurs are scared to really focus on one thing and really niche down. That's what I think, man.
Really agree.
And the way that I realized this is because one day we went to the mall. Me and my wife went to the mall with my daughter. Right, we were going to buy new clothes for her because her clothes didn't fit anymore, and we buy $1,000 of clothes for my 2-year-old. And then when we were driving back, I had this feeling. I just had a bad feeling in my heart, right? And I told my wife, let's see, just put something on her, put something on my daughter. Let's see how it fits. And she could literally swim inside her clothes, man, and inside the clothes that we buy. And the reason I did that was because my mother, every time she bought clothes for me, she would buy them 1 or 2 sizes bigger so that they could fit for a longer time, right?
Yeah.
And then that was the first time that I was like, damn, I have a scarcity mindset, right? And I started to look, and I started to just look in and really dive deep into any instance that triggered that mindset, and it brought me to realize that, man. So I just think it's a huge one. I mean, it definitely got me stuck. Well, not stuck, but it definitely got me playing smaller, making less money, working harder, and just getting less results than I probably deserved just because of that one thing, just because of not wanting to niche, having scarcity mindset. So that's why I wanted to drill into that, man. So now let's keep on going. All right, so you bought your first, you found your deal, and then what? Let's keep on going.
Yeah. So, once you get it under contract, you've got to do your due diligence. And I mean, a lot of the stuff is all happening at once, right? You get it under contract, you're doing due diligence. You've got the attorneys writing up the PPM, private placement memorandum. You're raising capital. You're finding the debt. And so, again, likely one person can't do all that. So either you've got to partner with other people, or you have to have a big enough company that you have employees that can handle a lot of it. So and when you're starting out, you're probably doing a lot more of everything than you are as your, business grows and scales, because again, probably that goes back to that scarcity mindset, right? You're afraid to hire people, you're afraid to give up a piece of the deal. You're just everything. You're looking at it from the micro level instead of on the macro, and again, that sort of long-term outlook. And it's like, if if I can if I have to give up some percentage of a deal and bring in a partner, but it saves me a whole lot of time or a whole lot of headache or stress, great, because there's going to be other deals, right? So if I'm thinking of it as I need to keep every percentage, a lot of people, I think they look at that GP percentage and they're like, I need to try and squeeze every percentage out of that one. You're not in this to do one deal. You're in this to do many deals, and you're going to do that by sort of bringing on other people, whether it's partners or employees. So it's just you've got to shift that scarcity mindset, and it's very hard to get away from it, and I still have it happen to me sometimes. I still worry about
like
hiring.
right now.
What's that?
It's a process, like you said right now. Like
Yeah.
when I ask about the long-term thinking, it's something that you constantly gotta work on, right? And it comes less and less and less, but it never goes away, right? You just like manage it.
Yeah. Well, and that's it's it's funny. So going back to the Alex and Layla Hormozi, another one of the things, the points they put out there that I really like, and it helped me, is they said feelings, thoughts, emotions are not facts. And so you can have a scarcity, you can feel a scarcity mindset, you can feel stress, you can feel that something's a problem. That doesn't really mean that it is, right? And so it's kind of being able to take that step back and say, is this something I really need to worry about? Is this something I really need to, is it in fact a problem at all? Or is my mind just making it a problem? Like, there are lots of times, and people do this in regular life. This isn't just, business or real estate. It's like things that, people will get upset about, and if you really step back, it's like, is that worth bringing my day down because of something like that? And it applies in business. And I think this is where you look at your mentors and you look at, people that have been successful, and you run these scenarios by them, and they're like, you're like, I see people even on social media. I lost, they'll be like, I lost $30,000 on blah blah blah, and it's like, I can promise you, because I went through this and talked to people have lost 10, 100 times more than that. Like, people have lost far more than that in their businesses in real estate. And guess what? You just go on, right? Like, it's just kind of, if you want to be successful, you just go on. There's lots of people that lived through the crash in 2008 that were real estate investors and had a hard time, and they're still real estate investors, and they came back around and they made their fortune and then some back. So it's like, you just can't give up. You just and you have to realize that problems are going to come up. It's just a fact.
Mm-hmm. For sure. So, Jason, so what is your superpower? So, like, what is like the so first you gotta focus on a little bit on everything, right? But then as you have successes and you grow and you scale, you can bring other people on, and then you have the ability to focus on what you do good, and what you're good at, right? So, what is it that you are good at, Jason?
It's a I've tried to figure out the answer to this question, and I think really what I'm good at, like, because if I think this answer could go a couple ways. It could go, okay, within that syndication model, like, which of those things I told you about, what am I good at? And I think I'm good at asset management. I have a construction background, like that. That's like what I would say in the nitty gritty. But if I'm looking at it from a larger picture perspective, I am good with people. I'm good with connecting and relating to people, sort of all the way up and down, kind of the spectrum of who you might deal with in business. Like, I can talk very easily to the contractors that work for us and do renovations on our house, but I'm on our buildings. But also, I'm very happy to talk and connect to, people that have been doing real estate for 20 years and are super successful. Now, what I will say about that is I am very uncomfortable in large group settings. So to me, when I say this superpower, I mean it in a more intimate one-on-one type of conversations. But I'm not good about going into a room and being the guy that'll just talk to anybody. I have a very good friend who is, and I'm envious of how good he is at it.
Mm-hmm. Okay, so people. So I know you actually have a podcast, right?
Yeah.
And you have one-on-one conversations with other people. So can you tell me a bit about your podcast and the role that it's played in your real estate investing journey?
It's been great. I started the podcast because I wanted to, a couple of reasons. I wanted to sort of get out of my comfort zone, and I knew that would help me do that. Also, I started it in 2021. We were still in sort of at least partial lockdown from COVID. It was hard to travel. I have young kids, so I can't go to well, I could go to every real estate conference, but I don't like being away from my family that much. So I found this as a good way to network. And again, it's a way for me to network in a way that I'm comfortable with, right? Going to the conferences, it's hard to just kind of start talking to random people for me. I see that as a weakness in myself that I need to work on, but but again, I can also use other methods of communication like the podcast, like one-on-one investor calls, that kind of thing, to really be more effective in my communication.
Mm-hmm. So you're one of your superpowers is people, right? But not necessarily like going into a large group of people like a networking event, but having more like having a intimate conversations with one-on-one, right? One-on-one conversations with people. And one of the things that you've been able to use is podcast, right? Like you've been able to use podcasts as a networking tool. So has your podcast, who do you interview in your podcast? Do you interview people?
Yeah, I interview people generally. I look at it as sort of real estate inspired. Most of the people that come on the podcast are real estate investors, but it's also very much about mindset. And so I've had because I think mindset is a huge part of being a real estate investor. But I've had fitness professionals, I've had business and life coaches. I've kind of run the spectrum of people that use mindset to their advantage and to reach a level of success, that people that can't shift their mindset or aren't willing to shift their mindset, that they probably won't reach those same levels of success.
And has your podcast served good as a networking tool for your real estate business?
It has. I've connected with a lot of other real estate investors. I think it's been really cool because I've had the podcast is coming up on 2 years, and it's been I've seen I've had a lot of people on there I've had people on there that people would say are like big names, but I've also had a lot of people that were early on in their journey, and then I've got to interview them and then see all how their journey has gone over the last year or two, and it's just been really cool. Some of them we're starting to like have some of them come back, and I love it. I just love the conversations. I love seeing the success that people are having. It's very, very cool to me, and even sometimes the shifts. I've had people that are were focused in one aspect of real estate or whatever it was, and now year or two later they've kind of found a different niche.
Mm-hmm. So most people that listen and will be listening to this podcast are people who are aspiring real estate investors. They're either real estate investors or aspiring real estate investors. So they're involved in real estate, whether that's actively or passively, right? Either way, they've chosen to use real estate as their wealth creation vehicle. So I do end my podcast with a couple of questions, but before I go ahead and start the first one, ask the first one, do you have anything that you want to say to those people, to like the audience, to any modern king and queen out there listening?
Yeah, I mean, I think, and I sort of touched on this before, but I honestly believe you can accomplish anything you want to, as long as you don't give up. Just don't quit, right? It's not going to be easy. Real estate investing is not easy, uh, but it's also honestly not easy to go work a 40-hour-a-week job that you hate. Like that's not easy.
Yeah.
So why don't you? It's people say it all the time, but choose your hard, and your hard, put your hard work into something that you're really passionate about. But you can't give
Very
up because it's not going to come quick.
awesome. So, Jason, the first question is, what is a false limiting belief? Can you hear me?
Yeah.
Yeah, because I think my AirPods disconnected. But okay. So, what is a false limiting belief that you see most beginner real estate investors have that holds them back?
Ah, gosh, there's so many. I think, there's these are, most limiting beliefs are false. So you can say, people that think they're too young, people that think they're too old. I was one of those people. People that think they don't have enough money or enough time, right? Like there's ways around all of these limiting beliefs. So the reality, I mean, there's so many of them. I think almost by definition or by nature, limiting beliefs are false, right? Because if it were true, then it's just a fact. But if it's a limiting
Yeah.
belief, it's something that you believe, it's holding you back. But the implication is that you could overcome that, and that is true. You can overcome that. So again, it goes back to that, thoughts are not facts. So I I thought I thought I was too old to start real estate investing, just to have a bit of a career change. Like I just didn't. I thought that was, that's a limiting belief I had. I thought I didn't know enough. I mean, there's so many things like that have come up along the way, and it's like, okay, well, it's what's that? I think it's Henry Ford says, if you believe you can or you believe you can't, you're right. So you might as well just skip right to the believing you can and go for
Yeah.
it.
Awesome. So, on the other side, what is an empowering belief that you see most successful real estate investors have?
I do think it really comes down to that sort of unwillingness to quit, to recognize that there are going to be roadblocks, there are going to be challenges, there are going to be setbacks, but at the same time, like the rewards can be tremendous. Now, I think anyone going into real estate, the first question you probably need to ask yourself is, do I want to be active or do I want to be passive? And because those are very different paths, you may do both. But if you are deciding you want to be an active real estate investor, there's going to be a whole lot more, you know, challenges that you come across to get to where you want to. And so you have to really, I think, know yourself and get granular with what you really want out of life. And if you already have a job that you're passionate about, or you already have, something that's working for you, but you just want to generate passive income, real estate's a great place to do that. If you're in a position where you really don't like your job, or you're just not generating the income that you think you should, now you got to think about making shifts. But it's just, I think the first thing is a bit of a self-assessment, and then deciding, which direction you want to go.
Mhm. Awesome. The last one actually, is building relationships and networking is key to be successful in the real estate investing game, right? Raising capital, finding deals, and all of that, partners. So, what networking strategy or advice can you give on that?
I would say, having a podcast is very helpful, but I think probably even more so than that, um, social media, but not. It's and these are mistakes I've made. Social media, but not just. It's not just about putting out content. It's actually about, sort of the engagement, the interactions, that sort of thing. Because if you're just putting out like a million pictures, but there's never any engagement. You're not connecting with other people. It's the same as if you go into one of these working events and don't talk to anyone. It's not like if you walk into one of those rooms, people are going to look over in the corner that you're standing in and decide that guy or that woman is super cool, I'm going to invest with them. Like you need to get to make those connections more personal.
Awesome. Well, Jason, do you have any last words?
No, I think, like I said, just don't give up. Decide what you want to do, and give yourself some runway. It's going to take some time, and just don't give up. You can do it. There's no doubt in my mind, like, that anybody could accomplish anything that they want to. Really, it's very hard to argue against that in my mind.
For sure, I totally agree. So, Jason, what would be the best place for people to like connect with you?
Yeah, you can email me, jason@larkcapital.com. We have our website. You can go on there, larkcapital.com. You can schedule a call. Probably in terms of social media, @larkcapital on Instagram or Jason Balara on LinkedIn. Any of those things. Shoot me a message. Happy to chat.
Awesome. We'll have all that information that you just mentioned in the description of wherever this podcast appears. Jason, it was a pleasure talking to you and meeting you, and I'll see you later.
Yeah, thanks, Alex. Really appreciate your time today.
Thank you for listening to the Modern Real Estate Investor Podcast. We want you to know that we love and appreciate you, and we are super grateful about being part of your journey of becoming a successful real estate entrepreneur and having it all. Please share this episode with a friend who you think will be impacted positively. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be across all areas. And if you thought this episode was really valuable, share it on your social media as a post or a story. We have a special gift for all of those who contribute to the Modern Kings and Queens movement. So for those of you who decided to share this episode and help us spread our message, send me a message letting me know on any social media platform @Alex Ramirez, the Modern King. I have a special surprise for you. Thank you for watching, and I'll see you later.